Hey, what's going on, my friends? It's your man Adam Ace Spencer here with another look at our dividend portfolio where we contribute $25 every week. And you can see over the past day, we are up 0.47%. Yeah, baby. The past week, though, our returns, you can see we're even right now. Ooh. But luckily, this is a long-term play, baby. Long-term game. And you can see over the past month, we're up 2.39%. The past quarter, we're up 4.62%. In 1 year, all time, we're up 14.95%, giving our total current value $1,995.09 with a gain of $171, my friends. We are killing it. Yeah. Now, the big thing to note here, our earned dividends is now twice as much as our weekly contribution. Remember, we only invest $25 a week. Now our earned dividends in total is $53.72 with our market gain being $117.94. So, hey, things are going really well with our dividend portfolio. This is a great way to kick off the new year. I was a little worried, I know because of tax harvesting, a lot of people just selling off their losses and stuff. But you ain't really, like I said, the past week, yeah, we were about even for our returns. But then everything else the past month, one day, we good, we Gucci, we good. And so you're not really seeing the tax harvesting happen so much with dividend plays, and partly because, well, they're more reliable and, they weren't really affected as much. They weren't really getting hammered as much. So you're seeing that tax harvesting take place a lot more with the growth stocks, like our growth portfolio. Ooh, we're getting hammered over there. But again, that's not even as old as this portfolio. So, maybe that will amount, be in a similar place by the time it gets to almost being 1 year, because we started this on February 1st. Can't wait to do our full 1 year first, our first full 1 year anniversary, look at our video portfolio. I'm anxious to see where it's at. Now, of course, anything could happen with the market now until then. Things could tank. Our growth stocks, bloody. It's been a nightmare. But when we look at our dividend portfolio, you can see as a whole, things are going pretty well. At the top of our list, we have PepsiCo, which is up 37.78%, followed by Procter & Gamble, up 29.75%, Newt, up 28.76%, Coca-Cola, up 27.12%, Realty Income Corp, up 22.92%, JP Morgan and Chase up 17.53%, Johnson & Johnson up 14.07%, and Verizon Communications up 3.46%. However, in the red, we do have 3M, which is down 1.70%, and Innovative Industrial Properties down 8.07%. All of that said, I am amped with the way our portfolio is going. I'm loving it. And this is what it's all about, getting your money to work for you, growing your money. If we had this money, I always say it, sitting in a savings account, well, we would not have as much as we have today. We would absolutely have less money. And this is, again, what it takes to be in a position where you can get your money to work for you, grow your money. Now, it's not the only way, but it's one way, and it's an effective way. And this portfolio being up 15%, 14.95%, this is really good for returns. And if we were contributing $200 a week or $1,000 a week, $500, just more than $25, man, oh man, we would be sitting pretty right now, in which we still are. Because like I said, we started this portfolio with $100. And if you're new to this channel, as a FYI, we started contributing $25 a week. And then when it came to about March 5th, we contributed an additional $500 that we got from the stimulus check. We put the other, funds towards bills, and maybe we decided to get Chinese food and splurge, get some Jordans or something. went out to a nice dinner. I don't know. Maybe you did something nice. You treated yourself, but you put some towards bills, some towards treating yourself, and then the other small amount you invested in your portfolio, which we decided to put 500. And then every week since then, it's just been $25 a week. And as you can see, there are times it'll go up and then it'll kind of dip down a little bit or it'll plateau. You know, you can't worry about these dips because when you pull out in the long term, like you see how it is, it's continuing to go up. Now, of course, like our growth portfolio is volatile. It went up, it went down, it went up. I mean, now it's down. You don't see that reliability here with dividend companies as much because these are proven companies and, they've been around for years. They're established. And yeah, they might make changes in which we can make changes as well. We removed AT&T from our portfolio. Today, I don't think that was a bad move. I have no regrets. And at the same time, we added IIPR, who happens to be down right now. They were, I think, pretty much at the top of our list at one point, similar to our other REIT, New Tech, as well as Realty Income. So, you know, as I always mention, though, REITs are very, very volatile. So, although we decided to run with them in here in our portfolio, this portfolio that's supposed to be more sound and more, uh, uh, strong and less volatile. Well, REITs are very volatile, but they do give off good dividends, and they are pretty new, so they're still, kind of low on this list when you see how much we've actually earned in our dividends, $53.72 in total. But among our top three are REITs, which is New Tech here at $15, way more than everyone else, $15.28. Then we have Verizon Communications, which is technically our stock price, as we just saw on our list. Verizon's down kind of. I think they were down, right? Wasn't that the one down? Or maybe they were just in the red. But they were like at the bottom of that list. Now here with how much they paid us in dividends, it's actually second highest right now. And then our other REIT, Realty Income Corp, which is up $4.87. Our newest company that we added to our portfolio, which I think, technically it's the smallest stake we have probably too, is IIPR, Innovative Industrial Properties. And they've paid us $1.13. But give it a little more time, they're going to easily surpass a lot of these guys down here at the bottom of the list. And they'll be up here somewhere in the top tier, with these other REITs as well. So, you kind of got to understand and know what comes with the territory. I do expect our REITs to be volatile, as I always say. But the other companies in here, I do expect them to be more reliable. And in the long term, I believe all of them pretty much will continue to be around for a bit. But as time changes, as the world changes and evolves, companies changes. They have new CEOs. They get new board members. They have new goals. And ultimately, with those changes, we have to also decide what changes we want to make to our portfolio. And that's also part of the reason you might want to consider not investing in individual stocks like we have here, but maybe doing ETFs, which are, a favorite of mine that I do have in my, for example, Roth IRA. So I'll do some videos diving into ETFs more and things like that, as well as the Roth IRA. I don't think I do enough videos on the Roth IRA, but yeah, I'm going to kind of wrap it up there. Things are going really well with our dividend portfolio. A great way to kick off 2022. And yeah, even if things tanked, right? Even if things go down, part of the reason we love our dividend portfolio is because we will continue to get those earned dividends. And the benefit of price being down on a company is that if you believe in it in the long term, it's a great buying opportunity. You get to get that sale, buy it at a discount. Why wouldn't you want to buy a pair of Jordans for $50 when they cost $100 usually? Of course you want them on sale. So look at your stocks investments as the same way. That's kind of the goal there. And just continue to buy, continue to contribute. And as you can see, over the long term, things are going really, really well. So I'm going to wrap it up there. Feel free to leave a comment down below with your thoughts if you guys have any questions, any suggestions. And yeah, I have some links, like I said, down to M1 Finance where you can start your own dividend portfolio or your growth portfolio. Use my link, my referral link, and you can get some free cash back. I also have a link to Webull, in which you can get some free stocks if you open and fund your account with them. So, like I said, I'm going to wrap it up. Like this video. Much appreciation for watching. You guys already know. I'll see you in the next video. Peace.